Welcome to The Explainer. Today, we're breaking down how the AI revolution is unexpectedly reshaping the entire global battery market. You see, while the electric vehicle boom seems to be hitting a bit of a speed bump, some battery company stocks are just absolutely taking off. So what's going on? Let's get into it.
All right, so let's start with this puzzle. We're all seeing the headlines, right? The EV market, which was supposed to be the main driver for battery companies, is cooling off. And yet, some of these exact same companies are seeing a massive, massive resurgence. It doesn't quite add up, does it?
And, just take a look at this. Samsung SDI. In only 6 months, its stock has shot up nearly 100%. That's the kind of performance that rivals some of the hottest top-tier AI companies out there. So you know this isn't just some minor market bounce. Something bigger is at play. So what is the secret sauce here? Well, the catalyst for all this growth isn't on the roads at all. The real answer is in the cloud. Or, to be more specific, it's in the absolutely enormous, power-guzzling data centers that form the backbone of this whole AI boom. And that brings us to our first section. We're going to connect the dots here and see how AI's incredible thirst for power is throwing an unexpected and pretty critical lifeline to these battery makers. It's actually a pretty simple but incredibly powerful chain reaction. You've got the AI boom, which needs massive data centers. These data centers, in turn, need a colossal amount of stable, uninterrupted power 24/7. And the best way to guarantee that kind of stability? Well, it's large-scale battery storage, what the industry calls energy storage systems, or ESS. And what we're seeing is a huge economic shift happening right under our noses. Investment money that used to flow in traditional industries is now being laser-focused on the entire AI ecosystem. And that doesn't just mean the sexy stuff like chip makers. It means every single piece of the infrastructure that supports it, which absolutely includes the batteries that keep the lights on. Okay, but this isn't just a market trend. Oh no. Geopolitics is playing a massive role here, creating what you might call a perfect storm, a unique opening specifically for Korea's battery companies. First, you have the U.S. Inflation Reduction Act, the IRA. And folks, this is a total game changer. It's actively pushing huge buyers like American companies to find non-Chinese suppliers. Why? To qualify for some pretty significant tax credits and subsidies. It's creating a massive pull for new partners. Then, at the very same time, China itself is changing its strategy. It's beginning to restructure its massive battery industry, trying to manage its own overcapacity. This is expected to slow down the flood of cheap exports we've seen, which in turn helps level the playing field for everyone else. And it's not just the US and China. You've got Europe putting up its own barriers, hitting Chinese competitors with some pretty hefty anti-subsidy tariffs. So you've got these three huge forces all pushing the market in the same direction, away from Chinese dominance and creating this incredible opening for Korean manufacturers. Now, to see how all these big, abstract forces actually play out in the real world, let's zoom in on a single, game-changing deal that shows this shift perfectly. We are talking about a potential monster deal between Tesla and Samsung SDI. It's a landmark agreement, valued at around 3 trillion Korean won, for something like 30 gigawatt-hours of batteries. And what's so telling is that this deal is being driven almost entirely by these new geopolitical rules. And what makes this so significant is why Tesla, a huge market leader, made this move. They chose Samsung SDI, even though Samsung didn't have a proven track record in this specific type of battery, the LFP chemistry. It's because Tesla is a pioneer, and they were willing to take a calculated risk to secure a huge IRA-compliant supply chain outside of China. It's a classic de-risking strategy. For Samsung SDI, this deal is basically a home run. It's a triple win. First, it gives them that crucial track record with a top-tier customer. Second, it puts a mostly idle U.S. factory to good use. And third, and this is huge, it directly displaces their biggest Chinese competitor, CATL, for a major American customer. Just brilliant. But look, this single deal, as big as it is really just the tip of the iceberg. It's a glimpse of a much, much larger market-wide demand surge that's providing a real lifeline for the industry amid that EV slowdown. So you might be wondering, just how big is this immediate opportunity? Well, get a load of this number. About 50 gigawatt hours. And that number, that represents the current supply gap for just one customer. Tesla, for its projects in the US alone. That is a massive, ready-to-go market just waiting for qualified suppliers to step in and fill it. And this chart here just perfectly illustrates the situation. You see Tesla's massive demand? Well, even with huge commitments to both LG and Samsung, about half of it is still completely unmet. This isn't some forecast for the future. This is the demand that's on the table right now. But, and there's always a but, right? This golden opportunity comes with a deadline. It comes with some serious challenges. This is no guaranteed victory. Which brings us to our final and most critical section, the race against time. You know, the biggest challenge is mastering these LFP batteries. There's a fascinating bit of history here. Korean companies actually worked on this tech years ago, but had to abandon it because of patent lawsuits. Meanwhile, in China, they invalidated the same patent locally, which allowed their industry to just flourish behind this legal firewall. So now, Korean firms have to scramble and re-enter a market they were pushed out of decades ago. On top of that, they've got to break their deep reliance on China for critical raw materials like graphite. And they can't take their eye off the ball either. They still have to keep pouring money into R&D for the next generation of high-performance batteries to stay ahead in the long run. And all of this brings us to the core takeaway from this whole analysis. This geopolitical gift, this AI-fueled boom, it isn't a permanent win. Really, the best way to think about it is that it's buying time. So the real question is this. Can the industry use this borrowed time and all the profits from this boom to build a truly resilient, lasting advantage? An advantage that's independent of geopolitics? Can they get to a point where they can compete and win purely on their own merits, long after these temporary conditions have faded away? Well, that is the multi-trillion-won question.